What most people don't understand about Bitcoin is you don't actually need to do much to correctly place yourself in the market and make money. There are a lot of patterns that Bitcoin has been repeating since I've started trading and even before that, and I've been trading for 6 years in the Bitcoin market, that have just continuously showed up. I've used them to make hundreds of thousands of dollars, even more than that, and I've also used them to save me from losing money as well. These things can be used as defense and offense in the game of trading, and I'm going to be handing to you 5 of the most powerful ones that I've ever found in this space right here. This is loaded with secrets. I don't even know why I'm doing this for free, but fuck it, here we are. And before we get into the video, I want to highlight to you the exchanges that I'm using in these markets. If you want to trade in the same places, you're going to get up to over $65,000 in bonuses when you sign up to the exchanges I've linked down below. BingX does not require KYC, so that means no pictures of yourself or pictures of your ID. And you can also trade stocks like Tesla and Apple and so on. And Bybit will give you up to $30,000 of free money to trade with, just completely free cash. Any profits that you generate are yours to keep, which you can withdraw. We'll come back to them later on in the video, but I want to cover with you the more exciting stuff, which is obviously the patterns for Bitcoin. Probably the best one that I'm going to be sharing with you guys right now is number 4. I'm not going to get to it right now because it wasn't hugely relevant in the past, but right now, guys, this has been one of the main things Bitcoin's been producing. So make sure you watch this video right to the end. This is full of value, and if you do enjoy it, do me a favor and smash up those likes. Let's get straight into it. All right, and the first one that I want to show you is ascending and descending triangles. This is one of the most common, one of the most easily predictable and reliable patterns I've ever seen in my life. And I really like it when I find patterns like this because I can't stress this enough. If you're a regular viewer, if you're already subscribed, you know the deal. But I'm the kind of trader that likes to make my life easy, all right? I don't want to be scrambling to look for a million different things. These are patterns that are easy to see, and there are elements of self-fulfilling prophecies in these markets. We form descending triangles and ascending triangles all the time in the crypto markets, and people believe in them and they work. This is one of the best examples I've got of it for you right here, when Bitcoin peaked at $20,000 in December of 2017 and then entered a year-long horrible sideways range that led right into November, December, where we broke down again. This was a descending triangle pattern where we basically saw our lows just getting lower and lower and lower. Our highs getting lower and lower and lower while we were holding on to the same floor. Now, this is a really big deal. These kind of patterns form right angle triangles, and they're very reliable to give us targets to the downside. What's really interesting is if I actually show you this pattern, when it actually played out back here on the chart, what you're going to notice is if we actually look at, first of all, let's draw the actual pattern here so we can get it on the chart. This is going to be looking something a little bit like this, with a floor looking something a little bit like this, right? More or less. And if we kind of measure the percentage drop that we saw from the very top of this range to the very bottom, this was a 50% drop. It's actually stunningly close, right? I mean, it's so accurate here, 49%, depending on how you draw it. Obviously, you're going to have some small differences, but one of the key things that we know about patterns like this is we can actually extrapolate targets, where if we look at the size of this pattern, we can then say that, all right, well, maybe we can also get a 50% drop to the downside. And if we measure what happened here, this was a 47% drop. This is fucking crazy. I can't stress this enough. I'm showing you one example here, and we knew about descending triangles back here. Actually, I actually traded this pattern and made 60% profit. I beat the market here. That's the deal. You already know it. Back in VIP, I shorted this, and I actually went long up here as well and made one of the biggest gains of my life at that point as well. All of those trades went inside of VIP. If you guys are interested in that, that's just the group where I share all the information on every trade I'm taking, why I'm taking it, and so on and so forth. It's linked in the description. You can follow these steps to ask me a message directly and get yourself inside. But what's really powerful about these patterns is, yeah, you can actually see how low it might drop, or if it's an ascending triangle, you do the same thing. You just measure the height of the pennant where it begins, and then you'll just kind of extrapolate that to the upside and say, maybe we can get a pump like that. So that worked out really well for Bitcoin. And one of the things that I really like about this pattern is because it shows up all the time, it shows up on different time frames. So this one lasted from here all the way up to here. This was a 290-day pattern, but we had another one right here, right? And you can see how this happens on a much smaller time frame. Take a look at this right here. If I draw the very same pattern, we're holding the same resistance level with, broadly speaking, the same floor. Now, obviously, we don't need exacts here. I don't really care if we're overshooting the resistance or overshooting the support by a little bit, because what I'm interested in is the characteristic of the market. This is something that a lot of people stumble on, and actually it's where they go wrong. You don't need things to be exact. We're just looking for broad characteristics, and the characteristic of a descending triangle is that as we're going on, we're not able to push higher and higher, right? The market is trying. The market is holding the same floor. So it is really putting up a fight. But each subsequent attempt just shows you that the bulls have even less strength. It shows you that the bears are stepping in even earlier. People are even more fearful. They don't even want the price to go back up here. They want to sell it a little bit faster than they did last time because they're scared, right? That fear is setting into the market, and then the culmination of that, the apex of that, the pinnacle of that is the breakout point. Okay, and that worked out very, very nicely. I haven't actually measured this one, but let's just do this really roughly here. A 27% drop, and what low did we get here? That was a 33% low. So, we're getting fairly similar downside targets here as well. And what's really nice about this one is, it just forms on a completely different time frame. If we take a look at this right here, this is an 86-day descending triangle compared to here. We're looking at a 290-day descending triangle, and there's so many more. In fact, on the very same chart here, guess what we used to break out? It's actually one of the reasons that I was able to make such a huge profit trading Bitcoin at this time in the market, was because this pattern was so predictable. We formed an ascending triangle here where our lows kept on getting higher and higher and higher while we kept the same ceiling. This shows us that the bears were putting up a fight, but over time the bulls were becoming a little bit more impatient, and the bears, they probably expected that they could get a better exit on their Bitcoin, so they just didn't sell. And the result of that is our lows start getting higher, and obviously that pressure can't keep on condensing forever, so it needs to blow up. I went long literally the very day before this happened, because there was a lot more that went into this chart for why I decided to go long, but I'm very, very glad that I did, and obviously that did result in a really nice kind of move up there, which is absolutely phenomenal. And to put this in perspective, a move like this, when we get these descending triangles or ascending triangles breaking out, we get, within the first day 23% down. On this occasion here, 11% down on the first day, and then like a week later down by 30%. On this occasion here, within a week of getting the breakout, let's take a look at where Bitcoin was, 30% up. So these moves, they produce really quick reactions. The first day can be absolutely explosive, and that's actually what allows you to make the quick money that you see in the space, right? It is very possible to make money quickly overnight, so to speak, in trading, but the catch is that you have to prepare for it, right? So the money will come overnight, but the preparation might have taken you weeks or days or whatever of deliberation and confusion and so on. So overnight success is very much possible in trading. This is the realistic truth of it. It is possible. It's happened to many people, but you're gonna have to really plan out your trades quite well. And what's cool about these is how quickly you can make the money. It allows you to get out of the market quickly, and so the quicker you're out of the market, the quicker you're not risking your money anymore. I think this is something else that people just don't understand that they need to get, is you don't want to be in the market. The more you're in the market, the more your money is at risk. We don't want our money to be at risk. We want to quickly get into the market, get our profits, and get the fuck out. If everybody could do it quickly, they would do it quickly, right? If it was possible for everybody to get the 8% annual property increase, value increase that everyone's looking for, if it was possible for everyone to get that in an hour, we'd all get it in an hour, not in a day, right? So it's all about skill that kind of makes the difference there. And with these kind of moves, if you are interested in trading these markets, I did mention to you a couple of exchanges. I want to highlight them to you again. Bybit has been around for an incredibly long time, and they are definitely known as the best exchange in the space. I've been using them for many years, and I cannot just big them up more. Absolutely love the guys. I do work with them, but I was using their product first as a customer, and I've stayed that way because it is phenomenal. I am very diligent with where I put my money, and I'm very happy that Bybit is one of my main exchanges here. It's a huge bonus up for grabs, literally just depending on what you deposit. As soon as you start trading, you're going to get that bonus, and if you already have an account with Bybit, you can make a brand new one to get the bonus anyway, which is really cool. bcash, the thing that sets this apart is the ability to trade gold. oil, the S&P 500, the UK's FTSE 100, Tesla, Apple, Amazon, you name it, in addition to crypto without even needing ID. I mean, this is insane, to have this much access to markets and have the flexibility and privacy that, to be honest, isn't easy to find these days. That makes it really appealing. So they're definitely worth checking out. And if you are interested in taking advantage of the moves on the market, these are exchanges which are good for the serious traders. Obviously, got user-friendly user interfaces. They're not confusing, but they are definitely made for the pros. Now, the next pattern that I want to speak to you about is going to be rising wedges and falling wedges. So this is huge. This called the top for Bitcoin in so many different ways that it was poetic. This is Bitcoin when it topped out at $60,000, $70,000. And essentially all we had was the highs and the lows were closing in on each other, right? The two lines were kind of meeting and converging, and that forms a wedge. And in this case, the wedge was wide. I can't speak now. In this case, the wedge was rising. Now we know that because our lows kept on going higher, and our highs kept on kind of decreasing with acceleration. So that's what we were looking at there. And the thing that made this really compelling, right, is first of all, what is this? Let's just break this down. If we look at the price action that we had back here, there was a lot of just really bullish, explosive action just to the upside. Over here, we started to slow down, and that's what a rising wedge points out to you. It shows you when the market is starting to lose steam. This is a really, really big deal. If I kind of show you what this looks like with drawings, that will make a lot of sense. What we're looking for is that really quick move up. Hang on, let me just move the chart a little bit. What we're looking for is that really quick move up, followed by, we want to move a little bit slower here. That shows us that we might be in a rising wedge. That's basically what we're seeing here. See, we're moving up really quickly, and now we're moving a lot slower. If you draw a line of best fit, if you draw a line that as closely as possible just averages out the price action, it's going to be a line that looks a little bit like where my cursor is going right now. Okay, and so it forms something that looks a little bit like this. And the reason this is important is, we can kind of discern the momentum in the market here. Okay, over here, there's a lot of momentum. The price is moving up really, really quickly, quite explosive price action. Things are very, very exciting. Here, we're kind of starting to slow down, right? We're not moving with as much vigor as we did previously. Let's put this in perspective. It took Bitcoin 7 days to go up by $20,000 here. In the next 7 days, Bitcoin only went up by $10,000, and in the 7 days following, we dropped. So, we clearly weren't as aggressive overall as we were back here. And we can see that. It clearly looks like the momentum has kind of died off for the trend. And what that can lead to a lot of the time, you think of like a missile that gets shot up into the air, is now it's lost its acceleration and it's starting to curve back down. And when it comes down, it's coming down more or less in a straight line. Look at how that played out for Bitcoin. We didn't do it just once. We didn't do it just twice. We did it 3 times. This is how poetic it was, and it's the reason that people who say TA doesn't work are dumb cunts, is because TA does work. You're just bad at it if you're saying something like that, because we've got 3 examples of the exact same pattern. All rising wedges happening in the same place, calling the same top. That is crazy. That is very, very interesting. And actually being aware of this allowed us to position ourselves in good positions here. So if you were watching this channel back then, you're going to know about that. I was ringing the alarm bells up here because I was really, really nervous about how this trend was looking like it was a little bit too overextended. It was looking too violent. I did get very bullish right at the top, so I made the same mistake as everybody else, but I'm very glad that I was really exercising a lot of caution here. Actually, it was at this exact price level here at about $57,000, $58,000 that I sold a huge portion of my Bitcoin to buy a house, literally very, very close to the top, because I was able to see how overextended this market was getting at these places here, all called by the same pattern. Guys, that is absolutely crazy. And these are definitely patterns that you want to be paying attention to. What's really interesting about these patterns is a lot of the time the market actually gives us retests of them, which just kind of makes our lives easy. Here's another rising wedge that we had right here. We rose into it pretty quickly, and look at the line of best fit noticeably less volatile. If we just move these drawings out, you can see how clearly the market was more aggressive before and less aggressive now, indicating that we might break down. But what happens afterwards is even better, is we get that breakdown and the retest. This is where the trades are possible. 50% drop from here. Absolutely crazy gains to be made, for the people that are paying attention to the markets at these times. On this occasion here, we didn't quite have the retest or anything like that, but we did still have a similar wedge structure, and again it ended up dropping back down. So 3 rising wedges, 2 of them inside of a big one. It is absolutely crazy, and certainly an extremely reliable pattern that you should be paying attention to in these markets. We form them so frequently, and they are so often reliable. I think I might have just spotted another one here. Take a look at this. Yeah, we have got another rising wedge right there, again just leading to another breakdown. So typical, so typical. Here's a falling wedge. And those of you that have been watching this YouTube channel for a while, you're actually going to be familiar with a lot of this analysis, because I've given you guys this analysis before with some of the market analysis I've been sharing. So many, like falling wedges, they typically move up, and rising wedges, they typically move down. Okay, and it's the same thing. It's it's just momentum to the downside has dissipated, so we reverse back up here. Momentum very strong to the downside, weaken significantly, so the reversal comes. On this occasion here, we didn't have that bearish momentum leading into it, but it's the same pattern nonetheless. So reliable. Another one back here as well. They happen all over the place, and they are just so reliable for Bitcoin right now that it would be foolish to not pay attention to it. In fact, I think we're actually in one right now on one of my charts. Let me see if I can find you that drawing. It's this drawing right here. We're in a bullish one right here. See, so that is definitely looking good there. So let's bring it back here and move on to number 3. And the third one that I want to cover with you is going to be symmetrical triangles. Now, this pattern right here is just something that, again, shows up quite a lot as a continuation pattern. What we had on this occasion here, this is March of 2020. This was the big coronavirus market crash that shook the whole world. And Bitcoin had an explosive rally from here up to $10,000, from 3,000 up to 10,000. And then it formed this really nice symmetrical triangle. Now, all a symmetrical triangle is telling you is that the price has moved up into this range from any direction. In this case, we came from the upside. We moved up into this range, and now we're narrowing. Right now, the price action is narrowing in, which just shows you that it's condensing. Okay, so all that's doing is it's consolidating. The price action is just consolidating. When it's kind of narrowing into a symmetrical triangle, it's just consolidating. Our highs and our lows are getting tighter and tighter and tighter. And it's just a sign that the market is looking for a resolution. And what's really useful with these patterns is you don't have to do any work. You just look at the direction of the pre-existing trend, and typically you'll break out in that direction. So in this case, it's an uptrend. We traded pretty close to the apex. The apex is when the 2 lines meet. You don't typically trade right up to the apex because the range just becomes too narrow. It's not reasonable to trade there. And we get the breakout. The breakout happens to the upside just as we were already trending up in the first place. A very reliable pattern, shows up quite a lot. It's not a particularly controversial pattern. It's not a particularly life-saving pattern, but it's something that's worth keeping in mind. I'm struggling to find you other examples right now, but there are very many on the chart that you can take a look at. And the fourth one that I want to cover with you, now this is the biggest one in my opinion right now for Bitcoin. It is the one that we've constantly been printing on this chart that, if you were aware of it, you would have made so much money. It's disgusting. It is, I'm going to type it out because I can't stress it enough. It is deviations, okay? And this has been one of the main things we've been talking about on the chart. What is a deviation? A deviation is simply when the market fakes out, all right? When it goes above or below a key level and it looks like it's going to rally up into the sky or drop down to the lowest support levels, but it doesn't, and it just reverses and it fakes you out. You capture longs up here, you capture shorts down here, and then you run the market in the opposite direction and everybody gets screwed. The market has been doing this so often. I know for a fact you have been caught in it. I've definitely been caught in it. The market is doing this all the time. But if you are aware of them, if you are aware of how these patterns show up and where they might come, you can actually use these to make a lot of money. I actually recently used this to make a huge profit on Bitcoin. Many of you guys watching this YouTube channel for a while while know about this position where I made over $200,000 trading Bitcoin from this deviation right here. A deviation, again, is just where we are losing in this case, support level very unexpectedly and only for a short period of time before coming right back up. This is the deviation that I entered my trade on, and I only entered it because I knew about this pattern. I can't stress to you how important this is, so shout out to those of you that have made it this far into the video. If you do appreciate this so far, do me a favor and smash a like on this YouTube channel, and also make sure that you are subscribed if you haven't done so already. If you tick the bell icon, you will guarantee that you get notifications when I upload videos, which is amazing because this is very time sensitive content. You don't want to be missing out on it. But yeah, these deviations, absolute gold dust, ladies and gents, well worth paying attention to. Here was a beautiful one where all it is we're just going to be looking at support levels and we're going to be asking ourselves, does it make sense for the market to grab liquidity at lower levels? Does it make sense for the market to stop traders out? Because you got to imagine everyone's looking at this trend line. You know, you've got your stop losses here, maybe your stop losses here or here. The market is going to stop all of those positions out, screw you over. It's going to trap people in short positions and then rally to the other side. You got to ask yourself, is the market in a situation where it might do something like that? And you might be wondering right now, Sammy, I don't know what the fuck that means. I don't even know how the market is going to do something like that. That's all good. You don't need to worry about it because you got me. And I'm telling you when it's happening anyway. And one of the key signs of it is the long and short ratio. If we've got, this is the 𝗬𝗙 dashboard right here. It's not available to the public right now, but it will potentially be in the future. I don't know. I'm still developing it. I've just made it for myself for now. But when the long and short ratio, like it is right now, gets a little bit too skewed to the long side, especially for retail traders, that's always going to be a really strong sign that the market might drop lower just to close those positions, force them to close. They pay a lot of fees when that happens and so on. So, you know, that's one of the instances where it might happen, but also just when it's unexpected. If there's a lot of bias up here for the market to drop down, you know, it would be very unexpected for us to drop down and then recover back up. And so the market, you know, it just produces stuff like that. Here's another beautiful, it's, you know, like when we've got a really nice area of resistance that you just wouldn't really expect the market to lose, and then, you know, we just trade above it. You know, I mean, it's one of those things where you've just got to keep your wits about you. You can't always expect a deviation because then you'll never actually trade, right? You'll just become too scared and you'll be second guessing yourself constantly, which I know a lot of you have probably fallen into that trap too, where you become indecisive because you constantly see reasons that you shouldn't trade and you just kind of start overthinking it and you get too deep in your head. And then where it gets really bad, and you know I've lived through this too, because I'm saying the same thing you've just experienced, where it gets really bad is when you overthink something, so you decide not to enter a trade, and then it turns out that that exact trade would have been a huge profit for you, but you didn't take it because you were too scared, because to be honest, you just didn't know what you were doing as an analyst. You just didn't study things thoroughly enough. You didn't have a good enough kind of background on this stuff. And that, you know, I can't blame you. Trading doesn't really require a formal education. You can just sign up anywhere and deposit your money and get going, right? So obviously a lot of people don't have that right education, and that's what I'm trying to bring to you right here on this YouTube channel. So hopefully this is doing that job. But yeah, this resistance level here, very, very important. It previously acted as support. I mean, it's been an important area on the chart for a really long time, from this point right up until here, which was a 387-day period. But then the market just trades above it. And, you know, one of the things that are really characteristic about these deviations is that it takes the market up by a lot. So in this case, 7%, you know, that's a big breakout, right? I mean, anything above 3% is typically going to be considered, you know, something fairly, you know, somewhat significant at least. So 7% is a fair bit higher, but it also stays above for quite a while. And these are different to fake outs, right? A lot of you guys probably know what fake outs are. We've got this support area right here. And then within the day's trading session, the market falls all the way down here and then recovers back up. This is very clearly a fake out. Why am I not calling a deviation? Calling it a deviation? The reason I'm not calling it a deviation is because it doesn't last very long. This one lasted a long time, like over a week. This one was resolved within a day. If you were asleep, you wouldn't have even known it happened. You know, the deviations, the reason they're dangerous is they give you time. They even back test it, right? We back tested support, such a bullish move, indicating that we should move higher. So they really do trap you. You know, here's another example. We form them all over the place. Look at this resistance line, a fairly reliable resistance line, I would say. Definitely not something that is an unimportant level. But look at that deviation, right? That's a pretty, I mean, this is a tight range. We're not ranging by much, like a 7% range here. And then from our breakout point to our high, we're up by 7%, so this is a big breakout relative to the range that the price was in, and clearly turned out to be a deviation as well. Again, the reason I'm calling this one a deviation, this is potentially a fake, potentially a deviation. The reason I'm calling it a deviation is just because it was a significant one. It just, it trapped a lot of people, and we were forming them constantly when we were setting all-time highs. We set an all-time high here, and then we deviated above it, and then we deviated above it, and then over here we deviated above it, and then we deviated above that. So it's just the love language of Bitcoin. That's been one of the taglines of this YouTube channel: deviations are Bitcoin's love language. It's just something that we have to deal with. It might not be super relevant in the future. This wasn't relevant as much in the past. Certainly has always been important, but now it's just in your fucking face and you can't get away from it, which is kind of annoying. It might not always be like that, but for now it is really important, and that's why I wanted to cover it with you in this YouTube video. And the final one that I want to highlight to you before I get to something else which is really cool, so make sure you do stick around for that, is the head and shoulders pattern. And this is a really basic one. This is almost like a children's pattern. It's usually the most degenerate, the most emotional and short-term and noobish traders that pay attention to patterns like this. Why? Simply because it's easy to visualize. It's easy to learn. It's easy to understand. All we're looking at is a left shoulder and a right shoulder that are at equal levels, and then a head in the middle which penetrates those two levels. And so what we're seeing here, in this case, this is an inverse head and shoulders. What we're seeing here is, we set a low, we break that low, which is very bearish, but then when we recover back up, we're not able to get back down to this low again. And the reason that this is very bullish is because it shows us that where previously the market had the strength to take us down here, the next time we got down to this level, we couldn't actually swing below the support level. And that just shows you how strong the support became now compared to before. It basically shows you that the market has more strength now than it did when it formed the head. And in this case, we got the breakout. This is actually a very recent chart pattern. And the reason that I said this is what the degenerates and so trade is, obviously I'm just trying to piss people off and just having fun here, but I don't care about pissing people off. I'm just having fun here with myself. But, it's just one of these things that often gets kind of misunderstood or excessively applied, which is really not something that you want to find yourself trapped in. But it is one of those things that we have to deal with here anyway. And these are really good patterns. We just measure the head, and that can give us a potential breakout for the market here. And usually you want to get a back test of this range as well to validate it and tell you that actually, this is something which is going to be important in the market and continue to rally up. So we didn't get the back test yet. We might get it now. I don't know. But these inverse head and shoulders patterns, or the normal head and shoulders patterns, can be very reliable if you draw them correctly. The thing is if you feel like you're forcing, like this is almost forcing drawing it, because this right shoulder just isn't very developed. If you're kind of forcing the head and shoulders pattern to draw it, then it's less likely to be relevant. Again, we're looking for characteristics, and what we want to see are the equal, valleys on each side. We want to see the left shoulder and the right shoulder being, a nice mirror of each other to fill the pattern perfectly. If we don't get it perfect, like I said, it doesn't matter, because we are going for characteristics, not exacts. But the closer to the true pattern we are, the better that's generally going to be in my experience here. Now, what's really powerful about these patterns that I've just shown you is that they show up in the market all the time. I'm giving you things here that are usable, that I directly use in my trading all the time, and that I speak about on this YouTube channel as well. There are patterns that are useful for Bitcoin throughout time, and then there are patterns that are useful for Bitcoin only at a certain time, and then maybe it becomes useful again a few years later. I don't really know why it happens. It's down to a lot of different factors, like how many people are using them and so on and so forth. But what's really important is if we can identify the things that are relatively constant, that way we can kind of look, again, we're not going for the crazy hockey stick growth. I'm not interested in that, because the same mentality that gets you that kind of money, even if you get it most of the time you won't, is the mentality that's going to make you lose it. I've seen this a million times. Like I said, I've been a trader for over 6 years in the Bitcoin space. In the Bitcoin space specifically, there are a lot of degenerates here that make and lose a lot of money. I can tell you now, I'm not one of them, because I'm using just the tried and tested things that have been true in this market for a very long time. But I did tell you I'm only going to give you 5, and I want to give you one more as a bonus. I want to give you one more that's also really, really useful. And before I do get to it, I do want to highlight these guys again. If you already have accounts here, you can still get the bonuses, and these are definitely going to be some of the exchanges that give you the best options in the market. You can Google all of these things yourself, but what's huge about this is getting over $70,000 in bonuses for using these links just means there's a lot of value for you to get that just kind of accelerates your trading path, whether it means you're going to pay less fees, or if you're just straight up going to have more capital deployed into your account that you can trade with, which means you can just, you know, it's like someone giving you money and you don't have to worry about losing it. It can be a really useful thing for a head start. And with all of these options, with the variety here, you have got something that's well worth checking out. If you do want to take things a step further and learn about trading from me, learn about analysis from me, follow these steps on screen right here. It will take you to a direct chat with me where you can ask me how to join 𝗬𝗢𝗙𝗧𝗖𝗢𝗔𝗍 VIP and also gain access into my 𝗬𝗢𝗙𝗧𝗍𝗍 Academy course where I'm teaching you all sorts of stuff like this from A to Z about trading. It's incredibly thorough. It's literally where you can download everything that's in my brain into yours, which is an incredibly valuable proposition. So definitely do check it out if you're interested. But the bonus one that I wanted to share with you is right here. These are the ascending and descending channels for Bitcoin. This is a very common pattern and definitely quite reliable. Now, one of the main issues for these is we want to see the kind of targets that these hit. And the way we get the target here is we kind of measure the flagpole, which would be when the trend starts. That's over here. And then we would put that at the breakout point, right? And that can give us a potential target. They don't tend to hit their theoretical targets, but that's not a huge issue. What's really reliable about these is it just shows us, like, if we're generally slowly, this is the key thing, is if we're generally slowly trending down, that is going to be an indication that the market may pick up again and start rallying to the upside. And it's the same thing when we're trending upwards, right? So we've got a similar kind of pattern here. If I just delete all of these lines, you know, we're going to be drawing these with parallel channels, and we're looking at, broadly speaking, something similar to this, where we've just got our ascending channels. We're holding the same lows and the same highs along the trend line here. And eventually, if this happens within a downtrend, these can be very predictable continuation patterns for the downside here. Or if we form them to the upside, you know, we could see the patterns coming like this, right? Where we've got, again, you know, a very similar pattern. It's not exact. It doesn't have to be. I'm just trying to make a point here, but you'll see many more examples of this when you look at it on your own. What we've got here is we're moving up, and then we're kind of slowly fighting that, and we're moving up again. And all this does really is it just forms that beautiful staircase to heaven, you know, that you've seen on stock charts before. So it does it to the upside, and it does it to the downside. So there you go, guys. Those are some of the most reliable patterns that are just constantly surfacing in the market right now. I've actively been using them. You've seen a real-time example of a trade that I'm still in right now that I was only able to make because I studied this stuff really thoroughly. If you have enjoyed this video, do me a favor and throw a like up on here and double check that you are subscribed to the YouTube channel. If you are interested in more analysis from myself around the clock on altcoins, stocks, indices, and so on, check out the 𝗬𝗢𝗙𝗧𝗖𝗢𝗍 Daily channel. This is a YouTube channel that I'm uploading a bunch of other content to, not just Bitcoin. So if you're interested in all the other stuff, I'm covering meme coins, XRP, the NASDAQ index here, Apple, other meme coins, but then also coins like Ethereum, Doge, Phantom, you know, the big ones as well. This YouTube channel you're watching right now, this is mainly just Bitcoin. This is mainly just macro. It's the important stuff. But if you want more, that top link is going to take you there. And if you have enjoyed this video, of course, any support you can show does go very, very far. I do appreciate you guys. I hope you have enjoyed it, and I'll see you all in the very next one. Cheers.